Let's move forward and get a kind of conversation going on Indiabulls Housing Finance, which has recently raised money via rights, a very successful one. Good response coming in, and Gagan Banga, Vice Chairman and Managing Director of the company, is joining us. Gagan, good afternoon. Thank you so much for your time. Congratulations for a big rights issue, quite big one compared to your sector in the recent times, and that too got good subscription. Let's talk about this resurrection of Indiabulls Financial, the way it is going in Samman Financials. I saw your big ad in Economic Times using that word. Talk to us about this growth capital which you have raised, the utilization, and what direction is the company take now?
Yeah. Firstly, thank you for your kind words, and thanks for having me on your show. The way that we are progressing is essentially that we got into a asset-light model close to about 4 years ago. And since then, we have been systematically working on scaling that up. As part of that model, we had to continue a process of reducing our legacy book, which we have materially progressed on. That progress will continue over the next 24 months. But we've now reached a stage where over the last 4 to 6 quarters, we've stabilized the overall business, scaled up the retail disbursements. And whatever are the targeted segments for growth, the disbursements around that are coming along at a good pace. At this point in time, we believe that to grow and take the disbursements to the next level, we've set a goal that by end of fiscal 25, we should be disbursing close to about 2,000 crores. By end of fiscal 26, a month that is. By end of fiscal 26, we should be disbursing around 3,000 crores a month. In order to get to those numbers, this growth capital is going to come in extremely handy. And overall, the goal now is that with the equity capital that we have, first we try and get to a return on asset number which is north of 3% by fiscal 26, and then target an RoE number sometime in fiscal 27 to touch a 15% something.
I could just break it down. I would understand how are you. I can observe that you're, on the one hand, you're repaying a lot of overseas debt. Perhaps I'm assuming that you're restructuring debt in a way that the high cost debt could be repaid. And at the same time, I see a lot of NCDs being raised as well. So where would you like to take your overall cost of capital down to?
The more important thing for us is to make sure that we never get into a situation where any type of debt is ever going to get restructured or even remotely, even that suggestion is an issue to us. As and when whatever debt comes up for maturity, it gets repaid. If there is a chunky debt repayment in any month, in any quarter, we start preparing for that visibly and publicly 4 quarters prior to that, and start setting aside money such that the liquidity cover is already in place for that specific repayment. We have, following this model, repaid close to 1,25,000 crores of principal. 90,000 crores of that is on a net basis. So our gearing has been reduced by close to about 90,000 crores. From a peak gearing of 6.5 times, we are at 1.4 times. The target is over the course of the next 5 years to moderately increase the gearing from 1.4 times to 2 times. But that is going to be a back-ended increase. So that increase is going to come between fiscal 27 and 29. Fiscal 25 and 26 is going to see no increase. We will continue to operate at 1.5 times gearing, and which means that our debt levels would stay more or less in the same ballpark, where they are at about 32,000 crores, plus minus 10%. And so we are at one end repaying, at the other end, in order to maintain our debt levels at the current level, we will obviously have to continue to borrow fresh. And within that, try and populate as many options as we have. Over the last 24 months, the last 30 months, we have done 13 public issues, small in size, which provide us granular money, We can't take deposits, but we want granular money. So we've raised around 2,000 crores. This 2,000 crores today comprises approximately 7% of our borrowings. Hopefully, in the next 24 months, this should be comprising 15 to 20% of our borrowings. Similarly, overseas capital should be comprising 15 to 20% of our borrowings, and the rest will be institutional capital coming from banks and via the bond.
So, good amount of clarity in terms of where you want to take the business. ROE target is 15%, 3,000 crore per month kind of disbursal by FY26, and gearing will slowly and steadily inch up to 2x. But what's the ROA target internally that you're working with? And I was also looking at the asset quality. A bit of a chink in the armor there, a slight deterioration in the asset quality. Anything that we should be worried about, at least at the net NPA level?
No, actually, asset quality over the last 8 quarters has actually been the single biggest demonstration of strength. So even though the book has contracted, on absolute value, both the gross and net NPAs have actually come down. Because the book has contracted, so on a percentage basis, they will be marginally up. On absolute value basis, they're actually down. If I'm not mistaken, the gross NPA is down by about 200 crores. And this is despite this being a ever seasoning book. So this is not a book in which we are incrementally doing much of disbursements. The book is getting seasoned, and despite that seasoning, if the NPLs are staying stable, there cannot be a better performance than that. As for the question of ROA, we are targeting to touch an ROA of north of 3% by fiscal 26. We are currently at about 1.6% ROA. The incremental business that we generate generates around 3.5% ROA. The book that we are running down was at a similar level of about 3.5% ROA. So as our disbursals exceed under the new model, the repayments which are happening, 1.6% will start getting married into 3.5. And via that, we hope to get to about 3% by fiscal 26.
Before I let you go, Gagan, if you could talk to us a little bit about the cycle and the phase of the growth the cycle is in. Because, lately in the last 1 month, we started reading some reports and some views coming in that we are in the mature cycle right now as far as the housing space goes. Or you are going deeper into the country and, going to the mid and lower. How is the overall business shaping up in that sense?
See, the macro can't be more favorable. India is poised to go from over $3 trillion of GDP size to $5 trillion and to $10 to $10 trillion. In a country which is primarily depending on consumption for its GDP compounding, real estate tends to form a very, very important part. And unlike the rest of the world, where there was a massive real estate upcycle between 2014 and 19 before interest rates went up, India had a very benign downward cycle through that period. In 2020, when the upward cycle started, India was actually coming off almost 10 years of an extended downward cycle in residential real estate. If we look at the price compounding of real estate assets, despite the momentum that it has shown in the last 3 years, is all of about 7%. The average inflation through the last 10 years would be also in the same ballpark. So essentially, CPI is equal to real estate inflation. There is no better situation than affordability for this to happen. Wage inflation has been happening for the industry at 10 to 11%. So affordability is very good, which is getting reflected in how there is momentum on the real estate side. COVID has also resulted in demand for bigger homes. The massive spends that the government of India has made on infrastructure, especially on the road sector, and now on the airport sector, is connecting the hinterland with the main cities, which is causing economic prosperity in tier 3, 4, 5. And most importantly, the government's focused on making sure that affordability continues. So if you look at PMAY or the Honorable Prime Minister's personal focus on making sure that more and more people get homes, all of this
Right.
creates a very good scene for a housing finance company like ours.
Excellent. Thank you very much for joining us, Gagan, today and giving us a lowdown on the direction of the company and the recent big fundraise and the utilization of the proceeds.